Hey guys, how's it going? ¿Qué pasó? This is Hala Pablo. Hey, I want to do a quick video today on trend confluence volume. This is kind of like a tool or a method I use to pick to kind of prognosticate a lot of my runners, whether it be longs or shorts that I find, and then I go ahead and I share them with my group, or I upload them to TradingView, and many of them 80 to 85% success rate and like correctly identifying which way it's going to go. So here we have AST USD, and what I'm going to be doing, of course we already know what this did because this is back in time. This is a few days ago. We know that it distributed, but let's pretend that it didn't distribute, and we're in this macro structure here. And we have two trend lines. These are the macro trend lines. Here's the macro support, and here's the up here's the macro resistance, right? So we've got these two converging trend lines. We've got the higher lows, system of higher lows that it has been observing faithfully. You see this all the way. This is from back in June. It's rid of this. It's done these like pumps, these sporadic pumps, but it's always come back down to this slight kind of regression trend going up on an incline. And then once we've gotten to like September of this year, it began to we see that the wicks are now increasing. I'm sorry, decreasing the shadow, the length of the shadow. So we could do like an upper shadow resistance trend line. So we have two trend lines now, and they're beginning to converge. That's why I call it trend confluence. They're beginning to become like a confluence, like two rivers flowing together as a confluence. The same thing with trend lines. So we're coming to this confluence of this geometrical pattern here. And let's say that we're trading in here and we see it bouncing, and we see this symmetrical triangle forming, but we're not quite sure if it's going to mark up. So we don't know if we're going to take a long position or if it's going to mark down, and we need to take a short position if we're wanting to swing trade this thing. So one of the ways you can tell with a pretty impressive degree of accuracy, like I said, 80 to 85% has been my experience doing this, is you employ volume spread analysis reads as you get towards the end, almost to where it can't go any further. So you're getting to the end of this kind of knife point, this arrowhead, right to the end, right to the point, where you should notice that the price action, the candles, the spread have become narrow. The spread is narrowed to where it's just bouncing. There's little space to bounce now, bouncing off the support to resistance inside. It's still faithfully obeying, observing the confines of the trend. And then you should see, while the candles are still narrow and not much has changed in price action, what you want to do is start looking, turn your attention now to the vertical bar volume, right as you got into this tip here. And you should notice, notwithstanding all the vertical bar spikes in the past, it could be like you could have predominance of demand or predominance of supply. It doesn't matter. When you get up to the end, to the confluence, in this case, we begin to see what? We begin to see consecutive supply bars building. So here's 1, 2, 3. I don't know if you can see this. 1, 2, and these are 2-hour candles. So 1, 2, 3, 4, 5. That's 5 supply candles in a row. That's 10 hours of supply predominance. And then we have another one here, which is clearly overtowers all the preceding ones. And then that hooks into these very large, in comparison to what has preceded it, supply volume bars. And that is while the price action is still contained within the structure of this geometric pattern. That should give us a pretty clear indication that this sucker's getting ready to distribute. So we need to go into the forensic time frames, and it shows up even more in the volume. So the lower you go with the volume, if you really want to get an accurate read, I don't go lower than 15 minutes, but anywhere between 15 to 30 minutes time frame on the volume, after you've already correctly identified the price action structure up here, and you think you're getting close to where it's do or die at the confluence or the apex of the triangle, that's when you direct your attention to the vertical bar volume in a forensic time format. So okay, so this is just one example, and this is with air swap. Let's see if I can find something else. We'll do like a few more just to kind of drive this principle home in this video for you guys. Let's see, Fort, what's this? And you can go through, it's a real good practice exercise to go through, go into your watch list and find old cryptos, go back a couple months and you know, zoom out and look for these patterns. Look for, I mean, you already know if it's distributed or marked up. You could see that in the history, but you want to go back and you want to back test these ideas. So you go back to old trading ranges and old bear flags and bull pennants and stuff like that. So here's one that, you know, I did. Let's see. I already drew it out even right here. And here, let's get rid of this scribbles. And it doesn't really matter. So let's say that we are trading in this triangle and we don't know if it's going to distribute or accumulate. So we see it coming into a, again, here, and I'll get rid of this circle, make it clearer. We're coming to the point here, and this is a much smaller, this is more like a pennant here. But we have the higher lows starting here. Say this is the, well, this would be the selling climax, and then it came back up. This single bottom here came back up. This would be the buying climax, and it came back down. This would be the automatic rally, and these here would be the secondary test line. That's if you're doing it, you know, on the macro Wyckoff. But just if we're going to swing trade this for maybe 10-15%, then we could do it with the trend confluence volume technique that I'm showing you guys. So you come down here, and then we've you know, these are again 2-hour candles, so this is about a day, I guess. So after a day or so, we notice that the price action has drawn out this pennant formation. So and now we're getting close to the confluence of the pennant. So what do? You go down into the vertical bar volume, and then here's the 2-hour. So let's go into the 30-minute and see what it looks like here on the 30-minute. So now these are 30-minute candles. Now you're forensically inspecting the volume to see what the hell is it going to do. Let's say you're up here and you're thinking, oh man, is this thing could come back, could mark up and then go back up and clear out this liquidity void up here. Shit, I can make 30% gains. Well, hold on, not so fast. You don't know if it's going to go up. So how do you know what it's going to do? Let's do the VSA. Let's do the trend confluence volume reads. So we find that as, again, the spread is narrow and it's still contained within this geometric pattern, but it's ever so slightly heading towards the knife point of this triangle, and it hasn't dumped and it hasn't pumped yet. So you're wondering on what to do, if you should take position. Well, let's look and see. Here, right around here is when I would begin looking, because it can take off from here at any time. What do we see? We begin to see, here's 3 supply candles. They're kind of small still. They didn't overcome this demand bar before it, so let's wait a little. And now we have a series of low volume where it's kind of like it's kind of like a roadblock here. There's no, you know, this would be the equivalent of a doji where it's indecision. And you see this here. There are dojis, in fact. This guy right here is a doji candle. So this is clearly a pocket of indecision, and then boom, look at this. We got 2 supply bars. This one larger, so they're successively building. So this is 1 hour of supply, and the price action still has not broken the geometric structure. Then we go on a little bit more, it hugs support, and now we have a little bit of like demand coming in, but the demand is not predominant. More indecision, a little bit higher demand, so it can go either way. And then we have this supply bar. right here. So this supply bar, what I would look at is this supply bar and these two supply bars and these two which started it. And you have an overall, I guess that's maybe like half a day. How many candles are these? These are 30-minute candles, so it's about half a day of showing predominance of supply. That would point to a actual a bearish bias for me. So you would not want to go long here. You wouldn't want to take your chances and go long. Instead, if you're going to short, maybe you could look at shorting. And if had you shorted here, and what's that, 6%? It had a 6% loss to the downside, or a gain if you're shorting to the downside. So that's another way you could use the trend confluence volume to help you prognosticate what something's going to do. If you're unsure, it doesn't work. It's not 100% accurate all the time. Like I said, I get like maybe 80 to 85% accuracy on it, which is pretty damn good, I think. Let's see, is there anything else here that I can show you? 1 hour. Let's go to the 1 hour. See if there's anything else in here. Oh, here's another one that I did earlier today. I was going over some of these this morning. I went through my watch list and I was like, I'll do a little video on this, kind of help people if you don't know this technique. So here's another structure. You have a selling climax here, and it came back up, down, and it's bouncing around inside. You see this structure that's formed. You have your lower highs, higher lows, and let's say you're in this now, and you're like, well, are we going to come back up? Because it's possible, right? It's possible that we can come back up and do like maybe a reverse head and shoulders and mitigate this liquidity void here before we come back down. That's possible. Some people may be tempted to think it was going to shoot at that point, shoot up. But had you done your trend confluence volume read, you would see that as the price action approached the confluence of this triangle. See, now we're in 1 hour. So remember, we got to go back down to the forensic time frame. So this time let's go to 15-minute. And we got to scroll back because it resized everything. So we got to go back and find the structure where we were. That's the only pain about this. But it's because we're back testing. Of course, if you're doing it in real time, you don't have to, you're not having to go back and find everything like this. So let's pretend like we're trading this. We're in the forensic volume reads now. And we're in here, we're like, do I go short or long on this? And we find we're in here, came back up into, kind of broke the trend. It came down here, let me show you. Came down here. Was there any indication that it might distribute, that this wave was in the books? Well, maybe. We had this buildup in supply here on the pullback. This pullback here showed a buildup of supply, so that's correlation. And then here we have a little bit of supply predominance. But the main thing is, if you come back up here, you may think, oh, so this was just a fake out. Now the market makers brought the price back up into the triangle, and now they're ready to go to the moon. But what would clue me in that that wasn't the case was the buildup here. You see the supply. As we're back now, we're back into the structure, and supply is building. Demand is decreasing. See, demand would be increasing if they were going to pump it. But here we have this large one and then this smaller one. So this is a decrease in demand. And here we have an increase in supply. Supply has been increasing successively. Even though demand has the predominance, demand is shortening, whereas supply is expanding, even though it's smaller. And so that would to me showed the legitimacy of a downward movement, and I would not be looking to go long in this. So anyway, that's enough for now for this. I hope some of you gleaned something out of this. Let me know what you think. I appreciate likes, subscribes, however, if this helps you. And there's more to come. I'm going to be picking up the pace now as we're waiting to see what we're going to do, how far down Bitcoin's going to go, and how all this resolves in this bear market. So as we wait all this out, it's good to sharpen our swing trading skills, and that's what I intend on doing. So if you're interested in any of this, join me, and I look to see you soon. All right, guys, hope you enjoyed this. Have a good one. Be safe, and we'll talk to you later. Adios.